Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. I guess it would be remiss of me to not report on this email we're hearing about from Elon in regards to ARK Invest. I feel like there is a bit of ambiguity here and people are inferring different things. So I thought I'd try and clear it up as much as possible, at least to how I understand it all. I believe it all started with an interview on Yahoo Finance with Cathie Wood. In the interview, Cathie Wood thinks ICE car sales may be down because so many people bought used and new cars last year to avoid mass transit, and is the reason sales were so high last year, which I think we can all agree with. Cathie is saying that as a result, the vehicle inventory is now sitting in everyone's driveways and garages. She is implying that this is why sales for ICE autos seem to be down, rather than solely supply chain issues with chip shortages. And perhaps that's just an excuse that the auto companies are using to explain their drop in sales, and maybe consumers are waking up earlier than we thought and realizing electric is the future. Anyway, you know my thoughts. Don't buy ICE, as you could lose a fortune. And I thought it might have taken consumers a little longer to come to this realization. But when it happens, it will probably happen fast. But the media won't likely report it, as ICE manufacturers are some of their best advertising customers. In fact, judging from what my viewers tell me, they're my best advertising customers too. The likes of Ford and GM are literally paying me to tell you not to buy their cars, and me telling you that their companies are going to go bankrupt. Kind of funny. She then speculates on now the consumer is actually starting to consider whether their next purchase will be gas-powered or electric, and thinks electric vehicle sales will be up more than 50% this year, whilst traditional auto sales are basically flat. When she said traditional, she might be implying ICE vehicles, but we've seen those numbers falling, so perhaps she means overall auto sales, which would imply consumers are simply purchasing electric over gas. I contacted a large Ford dealer in California. He said they had about 79 vehicles in inventory instead of usually around 400. He also said if I wanted to buy a Mach-E, then he would charge an extra $10,000 premium. Now this is just one dealership from one manufacturer, but he did blame it on the supply issues. So there may not be enough data to draw any conclusions there, and I didn't inquire about any ICE cars, which they may also be marking up further too. I rang a Volkswagen dealer in California as well, and he was happy to sell me an ID4 at retail price. But who knows, perhaps the Volkswagen ID4 is just that bad, which other people are also telling me. If you like, maybe I could do more market research and ring around more dealers. Let me know if you think that would be interesting. But I think there may be too many variables at the moment to draw any concrete conclusions. Cathie Wood then explores her theory on gas vehicle sales and thinks that auto manufacturers will be cutting back, which will free up some of the chip supply that might have gone to ICE, that the electric manufacturers can then use, who are growing dramatically. In other words, if EVs are constrained by chips, then if consumers stop buying ICE vehicles, then EVs can use the ICE vehicles' chips. It's zero sum. But bear in mind, Cathie is also working in her own self-interest here on behalf of ARK, and her ultimate aim is to keep investors bullish for ARK. So as much as we like Cathie Wood, as she's a Tesla bull like us, just take what she says with a grain of salt, but it's still interesting and worth keeping an eye on. She then starts talking about the future electric vehicle sales, going from 2.2 million last year to 3.6 to 3.8 million this year, to 40 million in 2025, as EVs prices drop below ICE on a like-for-like basis, which does somewhat contradict her 50% growth statement for 2021. Initially, she didn't think that 40 million EVs a year was looking likely due to how the legacy autos have been reacting. But because China has been so quick to respond with a big focus on the environment and have been subsidizing electric vehicles so aggressively, as a result, the supply is starting to shift up. And the fact that legacy autos are starting to enter the market is not a concern for Tesla. It's more of a validation. Now, this is an enormous jump from where we are today. In fact, Cathie Wood has previously tweeted about this in the past, in fact about a year ago, saying that she expects 35 million sales a year by 2025 to 2026. She is now saying 40 million by 2025, due to the Chinese ramping up so much. This might also have to do with the level that CATL are ramping up their battery production too. Elon happens to reply to this tweet and says that over 30 million certainly by 2027 and 2025 is possible but unlikely. What this really tells us is a lot can change in 1 year, especially when you're dealing with exponentials. Even Cathie Wood and Elon can't predict the future of the success of the EV industry. I did a quick spreadsheet based on Cathie Wood's estimates going from 3.8 million this year to 40 million in 2025, and it averaged out at 80% year-over-year growth. Make up your own mind if that is believable or not, but she does say that we went from 2.2 million last year, which is still 72% growth if we hit 3.8 million this year, so not far off. But I can't speculate on whether these targets are real or not, or even possibly conservative, especially if Elon and Cathie Wood are so far from what they were estimating for 2025 last year. What I think is interesting is just how wrong we could be, and maybe the ramping up is potentially even faster. As new processes, technologies, economies of scale, or incentives kick in, then for all we know, we could be over 50 million in 2025. I'm not saying this is my prediction, I'm saying we really don't know. I mean, Tesla's new factories alone may even have a capacity in excess of 5 million, and they may be at full capacity in 2023. Add Shanghai and Fremont on top of that, and Tesla alone would be at 15 million units a year in 2025 at 50% growth. My point is, things are moving fast, and could move faster for all we know. But they could run into all sorts of other issues for all we know too. But I find it much more exciting and interesting talking about the potential success rather than the failures. I wouldn't be so motivated to make a video a day in regards to the latter. Okay, moving on, and this is where I believe all the confusion lies. Cathie Wood is asked if she sees Tesla's fair value at about $7,000. Now, $7,000 was ARK's previous price target, which was for 2024. Cathie Wood then explains that number was actually before the 5-to-1 stock split, implying it was actually only $1,400. She explains that her new number for the price target, their base case, which they call expected value in their price target, is now $3,000, which would have been $15,000 pre-split price. The price target increase was back in March, but some people are reporting it like it's new information, because she actually says, our estimate for Tesla's success has gone up, but she's referring from the old price target to the new price target, referring back to March, not just of recent. She says the main reason for that is instead of Tesla's market share going down from 2017 to today, it has actually gone up dramatically around the world. It sounds to me as if ARK are still sticking with their target set back in March 2021. And now we're seeing headlines that ARK Invest is saying Tesla is worth a $3,000 stock price, despite this being old news. It's just catching new attention. Tasmanian then reports on the Yahoo Finance interview saying that Cathie Wood remains optimistic about Tesla, reiterating the base case of $3,000. And now comes the exciting part. An email from Elon Musk saying he agrees with ARK Invest with a link to the Tasmanian article contained, saying Tesla is at $3,000 a share base case. Elon says this is possible if they execute really well. Elon liked a tweet Tasmanian shared about it too, giving validation to the email. And Sawyer Merritt says 4 separate sources have also confirmed this email is real. Gary Black decides to not infer the email to mean that $3,000 share price is possible by 2025, but thinks it's just a way to motivate the employees. My own personal inference is that Elon thinks $3,000 by 2025 is possible, and like he says in the email, if they execute really well. So I hope that clarifies everything for you. $3,000 would be around 300% increase from where the stock price is today, which works fine for me, and is still on the trajectory for a possible $10,000 stock price by 2030 that so many people like to talk about. Anyway, this is quite exciting, and when Elon talks about Tesla's stock price, it often does move the needle. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.